Welcome back to our Principle of Accounts class. In today's lesson, we'll be looking at the return outwards journal. Now, what really is the return outward? Now, return outward is a term used to describe goods that were returned by a business to its supplier. For example, goods were damaged or faulty or wrong order. Now, the return outward goes with the purchase journal. Now, when someone purchases goods, sometimes the person buying the goods might find that some goods are faulty. It may be the wrong color, wrong order, they over order, and they will return some of these goods. When the person are returning these goods or the purchased good, it is referred to as return outwards. So let's get into our example. Record the following credit return of purchases into the return outwards journal for D. Latchman. Post the relevant accounts to the purchase ledger and then shows the transfer of the return outward accounts in the general ledger. 11th September, we return goods to A. Ali, $180. September 6, we return goods to B. Bill, $100. 28th September, we return goods to QCAT, $30. 30th September, we return goods to PPAT, $360. Now we must look at what the question is asking us to do. It wants us to prepare a return outwards journal, and then we have to post it to the purchase ledger, and then we have to create a general ledger, and we are creating it for D. Latchman. So as with normal, we have to create our heading. We're creating it for D. Latchman, the return outwards journal for the month ending 30th September 2020. And then we use the standard format for the journal, which is the date, detail, and the amount. If they give us the invoice number, we have to include it into the format. In this case, they did not give us the invoice number. So let's go with our recording. The first date is the 11th of September. We return goods to A. Ali. So the date column we replace the 11th of September. And who are we returning goods to? We're returning it to A. Ali, so we replace in the detail column A. Ali. And how much of goods we're returning? We're returning $180 worth of goods. Then the second transaction, the 16th of September, we return it to B. Bill, $100 worth of goods. The 28th of September, we return to QCAT, $30 of goods. And on the 30th of September, we return goods to PPAT, $360 worth of goods. When we finish that, we have to add up all of the total returns for the month in the return outward. We have to add up 180, 100, 30, and 360, and we will get $670. And then in the detail column, we will write transfer to the return outwards account. Now this has bring us to the end of today's lesson. I hope that you have learned something today. Keep doing your own research, your own practice. Stay safe, and I will see you in the next lesson.